Good morning traders, welcome to this live currency strength indicator table video with me, John. In this video we're going to be taking a look at our live currency strength indicator tables and if there's any opportunities for us today. So we can see there's been some change to our tables. We can see that the pound is now a strong currency. It is featured as S1 on our trend traders, S3 on our day traders. So we're going to be having a little look at some pound opportunities. As well as that, we've got Kiwi on here. So we actually took an opportunity on Kiwi CAD at the moment. That's around about 50 pips in profit. So we'll see if that can continue to trade to the upside. There are some other things you can look at as well. So there's lots of Kiwi Oz, for instance. We can also see actually that the Japanese yen is the strongest on the day traders, showing us that on the lower time frames, that momentum's still strong with the yen. And this is something we actually spoke about earlier in the week. We were talking about if that yen is going to continue to remain weak, or is it time that we're going to start seeing a little bit of a pullback. Now, obviously, you've got to trade with the trend as well. And we ended up taking a couple of yen positions to the short side. So pound yen we went long on, Kiwi yen we went long on, but we actually came out of both of those positions in slight profit. And the reason was because the tables told us what was going on. So if I just scroll back here, we can see that the yen was on the weak side of the tables on the 4th of July, okay, and we spoke about that Monday, Tuesday. We were very much still saying there's a possibility that the yen could remain weak. It was W1 on both of those tables, so there was no reason to come out of any of those positions. And like I said, we were in Kiwi yen and pound yen long. However, we started to get a little bit of an insight into what was happening the day after. So on Wednesday, we saw that yen just completely removed itself from the day traders table, and we actually spoke about this in a blog post. We said that the yen has completely removed itself. Is it removing itself to have a little bit of a pullback and then reappear as a weak currency, or is it going to appear on the strong side of the table? Well, what we did then was we decided, because it removed itself quite aggressively from being W1 and off the tables, I decided to close my positions out. So I ended up closing both positions out in profit. What happened then was the next day, on Thursday, the yen appeared as the second strongest currency, and we had quite an interesting reversal setup. So Kiwi yen was one that we spoke about in terms of getting long right around the 89. So my entry was actually 89.06. In the morning, I was in profit by around about 20 to 30 pips. Price then started to pull back, and that's when so this is the 6th of July, so this is yesterday. So that is when I saw the fact that the yen was on the strong side of the tables at that point. So I ended up closing that position for about 12 pips of profit. But you can see here that has worked out really well for me, because there's a couple of situations as well. We've broken back below the 50 moving average for one. But two, you can see that we've started to now trade to the downside. So I would have been offside by 60 points or so. I think our stop loss was around about 80 pips. So we'd be well offside in this market. And it's the tables that have helped us achieve that early exit, which I'm pretty thankful for. Pound yen also. So we were in long on pound yen. If I just zoom in, we were talking about this sort of recent consolidation and whether price would continue to trade higher. I ended up taking a position long, and it was around about these sorts of lows in here. Let me go to an hourly, because I'll be able to show you in a bit more detail. So you see this kind of like wick low. I ended up taking a position here. I got triggered on the 4th. That was the 183.28 handle. I think I actually was 183.30 was my entry point, and price was going pretty well. We were up 50, 60 pips. At one point we were up 70 pips. Once I was up 70 pips, I moved my stop loss to break even, and then got wicked out on a break even there. But again, on the 5th, we saw yen remove itself from the tables. So that was a good exit in the end. I could have held it longer in theory. If we go to the 6th, around about 9 o'clock, would have been around about here anyway. So I would have been 25 pips offside. So even if I had to manually hard exit, I would have only lost 25 pips on that potential move. But you can see since price has traded lower. So the tables really helped show me how to exit that position as well. And that's why I use these tables to trade with every single day. It's because you may not see the underlying strength of a currency until it knocks you out of a trade. And the beauty of that is because it's measuring across all currencies, it's giving us a little bit of an early insight into what could potentially happen, especially when we get that warning sign of it dropping away from the day traders table completely. You know, the only reason it's going to do that is because either other currencies have become weaker than it, or if it's starting to show a bit of strength. And because we know that it's been on the tables for a very, very long time, likelihood is that it was going to start turning around and show a little bit of strength in the market. Now, we focused on some other pairs recently as well. So, you know, what I want to go through is the one that we've got open at the minute, which is Kiwi CAD. We ended up going long in and around this area here at the 82.10 handle. We are currently trading 82.59, so around about 49 pips to the good at the moment. And yeah, I'm holding this one. This one looks pretty good. There's no reason for me to exit this position. The tables are still Kiwi CAD long, and they're at S2W1, which is usually a good sign as well. So nothing to really do here. The only thing of concern would be is obviously we have CAD employment data coming up today. So it's completely up to you how you manage your position, whether you want to get out because there's high impact news, then that is completely up to you. Do you want to hold a trade over the weekend, or do you want to close that position out? I'm going to see how the US market kind of takes this. If the US market opens and takes this higher, then great. So yeah, we'll see what happens there. I don't usually particularly hold trades over a weekend, so you know, just in case of gaps and things like that, or any kind of situation happens, you just never know what could happen over a weekend. And if the market gaps, then you know, it could be against you. So we want to protect that capital. So I don't usually hold trades over a weekend, so I will assess this as the day goes on. But Kiwi CAD's still looking good. Now, obviously, we've got some other markets on here as well. Pound Aussie was one that I wanted to check out quite interestingly, because it is an interesting market, because we're coming up into the 1.9150 handle. We're actually trading around that now. And if you look at this weekly chart, looking left, there's not a huge amount of resistance between that and the 2.06 handle, which were these highs that formed back in April of 2020. So is there a potential for a move to the upside there? I do have a trend line resistance running through, which kind of intersects around about the 1.97 handle. So maybe that is a sort of short-term target, but that's about 500, 600 pips away from current price. So there's a good possibility here that if the pound does continue to strengthen, Aussie continues to weaken, you know, we could potentially see a 500 pip move here on pound Aussie. Now, going to the daily chart, what am I looking at? Well, I can see that we've had a shallow pullback. We pulled back into support at the 1.9 handle. Price has rallied. We've had quite an aggressive close yesterday, strong. So looking to see if that might continue going into today's trading. I'm looking for a bit of an area to get involved. I like the 1.9150 handle. The reason why I like that is because if we look left, there is these prior highs in here. So usually price can react from these prior highs. So if I was going to get in a position here at 91.50, I'd need 150 pip stop loss. The only thing I don't like about that is that it comes directly in at a support point, which is that 1.9 area. I would like my stop loss to be potentially below this low. So what I'm thinking is, if we go down to the hourly time frame, you're kind of seeing me do this a little bit live here. You can see this shelf just down through here. So you had quite an aggressive rally. Price is pulling back a little bit. Yes, we've got key support here, but you can also see we've got some supporting highs here. Now, that is the 91.20 handle. So I'm looking at a potential entry at 191.20. 150 pips just about gets us below these lows here. You can go a little bit more aggressive, a couple of pips maybe, 191.18, but you can see it 150 kind of brings us in there. So if we go over that, we can go over it maybe by about 30 pips, bring us in about that low there, gives us a safer sort of area where our stop loss can be. Because we've got such a huge potential reward on this trade as well, it doesn't really matter where we kind of put our stops too much, because we're still going to have a good risk reward ratio. So like I said, if we drop it in there, that's around about 200 pips. If we go a little bit tighter, maybe 190, look at that 1 to 3 comes in around about that trend line resistance that we were just talking about. So I quite like that opportunity on pound Aus. Oh, sorry, I didn't move my down. Let me just zoom back out. So even better risk reward ratio if we were to use the entry just a little bit lower at the 191.20. The only thing there is we are at risk of it not triggering. That was the only thing, the only sort of catalyst to that. So I will leave you to make your own minds up on that one. I think I'm going to post the entry at 191.20 with 150 to 160 pip stop loss to get us below these lows. It's up to you whether you want to take a different point of view, a different type of entry point, but that's what I'm going to be looking at going into today. Pound CAD was another opportunity that I was looking at. We can see that price has recently traded outside of this kind of consolidation pattern. We've rallied to the upside here. The only area I can see of interest for me right now is the one spot 6950 or even the one spot 69. Those are the only kind of areas I'm interested in. First target's one spot 71.30. Second target's 173. So again, you can kind of look at it as one or two things. You know, if price comes back into this area here, we need at least 100 pips on our stop loss or above. So again, if I would want to be kind of below the sort of midpoint of this consolidation, so you know, that to me is going to give us a sort of 180 pip plus stop loss. That's if we enter at the 169.50. If we enter a little bit tighter at the 169, so again, we've got CAD data, so the CAD data could push price into this 169 handle. Then you've got the opportunity to say, well, okay, 1-to-1 is an area that price has already been at. The 1 spot 73 handle then just comes shy of the 1-to-3 risk reward ratio. So that's something you can consider as well. It's just how you manage your stop losses here. Do you want to go tighter just to get a little bit of a better risk reward ratio, or do you want to go in a little bit earlier, kind of give back a little bit of that reward, but make sure that you're in the market? Something that you've just got to have a little think about going into today's session. But I quite like Pound Aussie close to the sort of entry point here, as well as the opportunity for quite a large reward if it does continue to take off. So again, something to consider there. Hope you enjoyed all the content this week, and I'll speak to you in the next video.